Do you think they've done enough with Basel III to stop another bout of turmoil like we saw in 2008, 2009?
I think they've plugged vulnerabilities which are around capital quality and quantity in those big international banks. And they're certainly going to make a difference there. It's going to cost us a bit as well. They've done a few things that we don't think are necessary for our system, like leverage ratios, and we're waiting to see how much national discretion we're going to have around those. Will they stop another 2008 crisis? Well, we're clever economists and regulators, but the banks are cleverer than us, and they're going to be ahead of us, and there's going to be stuff that will be going on that isn't what's envisaged now, that's different from this time, that'll be aiming to get around some of that stuff. So I think it'd be a brave regulator who'd say that's plugged for the future. That's always a problem, regulating this industry.
The Reserve Bank in 2006 looked at coming up with some supplementary stabilisation measures, and you could argue that the core funding ratio might have been one of those. Are there others that you think you could look at to help you, or look at them again? Because largely you decided not to go ahead with any of those.
Yeah, I mean, the world is looking at those at the minute, and what they're doing is looking at what the East Asians do, which is much more focus on, or being quite tough about deciding what classes of people banks can lend to, so loan-to-value ratios, those sort of things, income servicing ratios. That's quite intrusive. Then you've got a lot of the Northern Hemisphere saying, well, these capital requirements with capital buffers and potential for counter-cyclical capital requirements, could you use those? Now, we've done a little bit of work on that, and it doesn't look that sensitive a tool for us. We think the core funding ratio might be a better tool. Yeah, we think that could make a difference.
Just looking at the banks here, you heard a lot about too big to fail banks in the United States, but actually our big four banks are proportionally as big, if not bigger, relative to our economy than theirs. Are you worried that our banks are too big to fail?
Well, we don't call them that. We call them systemically important, but that's sort of somewhat similar. They're different. I mean, they're extremely important for the economy. Actually, it's ironic, but those four Australian banks are relatively more important to the New Zealand economy than they are to the Australian economy because they're a bigger proportion of it. They're not, however, like, the Northern Hemisphere regulators are saying, is it too big to fail, or too well connected to fail, or too complex to unravel? And ours aren't too complex and too interconnected, I don't think, but they're certainly big and tremendously important for the New Zealand system. And that's why we've got a pretty well-honed toolkit of things to do, in the event of problems, which we hope we will never face.
Just moving away from the banking system to the economy, one of the things that perhaps has surprised people over the last year or so is the impact of deleveraging on the developed world, and we're part of that. What's your view on how far this deleveraging could go, what impact it might have on not just our economy but other economies over the long term?
Yeah, well, we don't actually know because there's more deleveraging going on than we thought would happen. We're seeing it in the household sector, we're seeing it in the farm sector, the business sector, and the government sector. That's everything. So it does mean there's less money sloshing around the high street. We're getting good export prices, but they're being used to reduce debt. And I think banks are probably saying, gee, we'd like to lend a bit more now, and rather than not returning businesses' phone calls, it's business not returning their phone calls at the minute. So we do need to see that turn around, and we've always said we need to see business credit pick up and business investment pick up as well. If it doesn't, then growth doesn't recover. But at the minute, we're less worried about that.
Is there an element of frustration for you in that, as the debt was being built up from 2004 to 2008, that blunted the impact of monetary policy, and on the way down, the same reversal of that debt is making it a little bit harder for you to do your thing with monetary policy?
On the way up, yeah. On the way down, no. We think monetary policy is pretty effective, given that we never got near that zero lower bound interest rate issue that some other Northern Hemisphere countries have got to. So, no, we think monetary policy is effective. We think the OCR is very effective. There's a margin in there between funding and lending that wasn't there before. But given that most New Zealand mortgages now are either floating or very, very short term, pretty effective.
Now, just looking at the performance of the Australian-owned banks in New Zealand, in the book you talk about moments during the crisis when you knew more about what was happening in their own banks than they did, and some of the inexperience of the management with the big four banks. Are you comfortable now that they're doing the right thing by the economy? Because there was a point, particularly in early 2009, where you argued the banks needed to pass on more of the rate cuts to people. Are you confident that they're doing the right thing?
Yeah, we were concerned at that time. No, I mean, they actually want to lend and get back into business and get back into growth now, and that's what we want. But they're all, I think, appropriately cautious about quality of lending, so we have no complaints.
And just on this issue of what's happening in the rest of the world with currencies, there's some talk about competitive devaluations, about the risk of a race to the bottom and a game of musical chairs where those who don't race to the bottom with them are left out. Is there a risk for New Zealand that we get left out and our currency rises through the roof while everyone else engages in competitive money printing?
No, I don't think so, but nevertheless it's a bit worrying what is happening in terms of political rhetoric and action around competitive devaluations, because I don't think that's going to help some of the countries involved. And what does it do for New Zealand? Well, you know, you can think of various different scenarios with different effects, but it can't be good news for us.
And is there a prospect at some stage, if everyone engages in these currency controls, new tariffs, new capital controls, that New Zealand might have to look at something like that itself?
Well, not in prospect at the minute. We got through the crisis without a big growth of trade protection. It would be very disappointing to see countries descend to that now.
Dr. Bollard, thank you very much for coming in. I really enjoyed our double shot interview. That was Dr. Alan Bollard, the Governor of the Reserve Bank, here with interest.co.nz in another of our double shot interviews.